So hi guys, we have Tushar Khurana with us. So he's writing about the different companies like the micro cap, small cap companies on Twitter. So I will add his handle on the description so you can check about the different companies which he has been following. So today we'll discuss about the edges enterprises. The Tushar will give his understanding about the company, and along with that he will also discuss about what is his investment philosophy. So over to you, Tushar. So you can continue.
Yeah, hi. Thank you everyone for watching this video with Shank and me. So I'll just introduce myself. So my name is Tushar Khurana, and I started my investing journey from 2020. That was before COVID hit us. Back in January, I started, and and I'll be honest with you, like the way I started it, it was not really going into a trade or something. What I first did was I tried to understand the basic finance of a company, like how do you really value a company. So from there I started. I basically went into this study of what all these terms that we use in the, like while assessing a true value of a company, or how do you really value it in future based on its earnings. So all these things like book value, what's a book value, what's a PE, what's the earning per share, and all these things I first took a deep study of, and then I started my journey of investing. But at the same time, I think it's an honor for me that I'm doing this session with Shashank, because I'll tell you guys, like when I started from studying these things about the basic things in investing, then I went on to see how a company is analyzed, and I think there Shashank played a major role, because like every Saturday I would go on YouTube after doing my breakfast, and I would be looking forward to the analysis of Value Educator. So that time I didn't even know his name, Shashank. But so from there on I started, and yeah. So that's how my journey started, and then COVID hit us really hard, and I would say that all these few months before COVID hit us, what I learned was not to sell in panic and just run away. I held on to my stocks that I was invested in, and from that day till now, I think that has done really well, and that has done, like I've done justice to my study all these 2.5 years or so that I've done in investing. So and now coming to my investing philosophy. So I give a lot of importance to the margin of safety. That's for one. And then I really feel that like after coming to Twitter, I really felt the impact of these influences that we have on us about what we see on Twitter or any other social media, for example, about a company. So from there on, I understood that so basically there are two situations in which you can really make big in investing, and one is where a company is unknown to the street. The street is not even knowing about the company, what it does. And then there is another situation where a company, where people have a negative bias about a company. So the company that I'm going to discuss with you today, SCS Enterprises, falls under the category where initially people had a negative biases about the company after its IPO, where it was 100% OFS. So yeah. From that time to today, if we see, the perception has changed quite a bit, and I feel really happy that I came across this company during its IPO days only. When I went through the pre-IPO discussion of this company, that's when I realized the true potential of the company, and I've been invested since, and I've been writing about this company ever since. So let's start this, and I'll tell you about the company, what it does, and how the future looks like for this company, STS Enterprises.
Just a second, Tushar. So first of all, the disclosure is like this is not the investment advice from my end or the Tushar's end, and this is just for the educational purpose. We'll be discussing about the business segment of the SGS Enterprises, and like Tushar will be giving his view about the company. But this is not like the recommendation, so please take a note.
Yes, definitely. This is a disclaimer. I'm invested, but I do not recommend you to invest based on my thesis. You need to first do your own analysis and then you take your own decision. So shall I proceed, Shashank?
Yeah, please.
Okay. So STS Enterprises, so it's one of the leading players in the decorative aesthetic industry. So for those who may not know what an aesthetic is, so it's basically a decorative that we use to appeal, give a good appeal to a product. And the sector this company operates in is the automobile sector, including two-wheelers and passenger vehicles, as well as it caters to the consumer durables. So what we'll discuss in aesthetics will revolve around this sector, which is the autos and the consumer durables. So the company was founded by Mr. K. Joseph back in 1987, who's also the managing director of the company. So it's a design to delivery aesthetics company. So what they really do is so they are involved with every OEM when we talk about the auto space. So they involve with every OEM from the time of design of a particular model of a vehicle. So from that stage up to the final delivery of that aesthetic for that particular model, the company gets engaged with them, and they cater to all sectors of the autos, be it the two-wheelers, be it the PVs, and then some of the CVs as well. So we'll see what are the products that are there in the aesthetics in the next slides as well. So just to touch upon on the products that they make are the decals. They make the body graphics, and then appliques and dials. So we will see what these products are. It may not be known to you guys, but we'll see how these products look like. Then they also make the overlays. They also make the chrome plated parts for the autos. And just to tell you more about the history of the company, so back in 2015, this company was acquired by Evergraph, a PE investor. So he acquired major stake in the company of 51% from K. Joseph, though K. Joseph still holds around 15-16% in the company, but the majority is owned by Evergraph, and they both are the promoters of the company. And as we know, the last year we had the IPO of this company where it was a complete OFS of 800 crores. While earlier Evergraph used to own 51% stake in the company, but now their holding is now up to 35%. And then K. Joseph, he still holds 15% in the company. So moving on. So these are the product offerings of the company that we just talked about in the earlier slide. So if you see, these are the decals and body graphics. So you can think of it as a packaging company for automobiles. So you see these prints, these stickers, you can call them maybe. So these are the decals. Then we have the overlays. So overlays are basically you could see on your washing machine the touch buttons that you see. Those are called overlays. So they cater in a big way to the consumer durables. Around 25% of their sales come from the consumer durables itself. So it's not like it's completely dependent on the auto, how autos will do, autocycle will do. They are also catering in a big way to the consumer durables. Then we have the logos. as you see. Then we have appliques or dials. So basically, the dials on the vehicle of, be it your four-wheeler or two-wheeler, those are made by this company. And then we have chrome-plated parts. So this segment of aesthetics they've ventured into last year only after doing an acquisition. So we'll talk about that as well. And then we have these optical plastics and in mold labeling. So all these, and then we have badges. So all these are basically the products of this company that they are engaged in making. Anything you want to add to this, Shashank? Any feedback of yours?
Yeah, you can go ahead, Tushar. Like,
okay.
If I want to do anything, like I'll ask you any questions.
Okay, great. So I'll move on to the next slide. So now let's see on the key customers of the company. So like I told you, they cater to majorly all the OEMs. Especially if you see two-wheelers, they are basically engaging with every OEM in two-wheelers except for Hero. But they are, if you would go from their latest earnings call, they are trying to knock on their doors as well, and if somehow they are able to get get Hero on board, then it would be a big thing for this company to expand and grow significantly from here on. But anyway, they are really bound to do really well, and how and why, that we'll see in the coming slides. So yeah, they cater to all the OEMs, and then in the consumer durables, they cater to these companies. So if you see, one name that stands out here is Whirlpool, because they deliver. It's their biggest customer. If you would follow this company closely, you would know that they are a major supplier to Whirlpool in North America. So yeah, that's from their exports point of view. And if you would also see, they have a customer stickiness. So their customers, they have a long relations with their customers. So if you would see, their relationship with 10 largest customers is for more than 15 years on the average. So yeah, that tells about the quality of products that they are delivering to their customers and why their customers are sticking with them. I'll move on to the next slide. So let's discuss now the.
Tushar, do we have the breakup of the revenues from the different sectors or the different sector they are offering, like how much is from the auto side?
Yes. I've covered that in this presentation, so you will see that part as well.
Right.
And
so
we'll also
mention one point here. So what I generally do is, when I study any company, I break it down into the different segments, and I study the individual segments separately. It might be a geography wise, or it might be a particular particular thing they are doing, specific thing. And then I combined all four segments and different geographies, and then I try to understand the business. So just if anyone wants to know like how you can simplify the understanding of a business, I think it's better if we break down into a different segments and collectively understand them separately, and then combine it together and have overall understanding.
Yes, I completely understand with you, Shashank, and I've tried to capture as much possible in this presentation. So you will see the breakup of the sectors, how much their contribution comes from each sector, and how much contribution comes from the different geographies. So I've tried to keep it short, but I'll try to explain it more in words, though the slide would also do some justice to how you want your viewers and as well as you to understand about the company and the sectors that they operate in. Okay, so it would be coming in the coming slides.
Right. Yeah, sure.
Yeah. So now let's discuss about the industry they operate in and how the future outlook of this industry is. So like I told you earlier, they are into the decorative aesthetics. So like I said, they cater to autos and as well as the consumer durables. So if you would check the autos and the consumer durables, if you see blended growth outlook for these sectors for the next 5 years, that they are supposed to grow to 10 to 12% CAGR for next 5 years. But if you compare it with the aesthetics industry is supposed to grow at the CAGR of 20% over the next 5 years, and this is the industry that they operate in. Okay, and this table shows the components that are there in the aesthetics, and what's their usage in each of the sector, be it two-wheelers, passenger vehicles, and consumer durables. So if you see, most of the components excluding overlays are there in two-wheelers and PVs, and then overlays are mostly used on the consumer durables, and then some of the other components like chrome plated parts, and logos and stickers are also used in the consumer durables. So the key point to note from this particular slide is this industry is bound to grow at a CAGR of 20% approximately for the next 5 years, and this is a source by CRISIL. This is also mentioned in their DRHP if you would read it. So I'll move on to the next slide.
Right. Yeah.
So now let's discuss the size of the industry they operate in. So if you would see, the domestic size of this industry is around 2,000 crores, and that is supposed to grow again at 20% for next 5 years. So if you would calculate, also if you would go through their investor presentation, you would see that this might be scaling up to 5,000 crores by FY26. This industry size, just domestic industry size we are talking about. And if you see the global aesthetic industry, which is only including Europe, UK, and US, the size of this aesthetic industry is around 20,000 crores as of 2019, which is again expected to grow 20% again for next 5 years. So you can understand, if the industry is growing at 20%, this aesthetic industry, you may take a feel of how the company would be growing if they are able to even outperform the industry they operate in. Now let's discuss about the breakup of the segments of this industry, where the most of the sales come from. So if you would see, the major contribution comes from the two-wheelers. And this is not from the company's point of view, this is just an industry size. So two-wheelers constitute around 52 to 54% of this aesthetic industry. And then the second major portion comes from the PVs, which is 37 to 39%. And consumer durables contribute around 8 to 10% of the complete aesthetic industry they operate in. So this answers one of your questions, Shashank, about segments of this industry and their contribution from each segment.
Right. Yeah.
Okay. So now let's see other peers of this company and in which segment they are basically operating in, and whether they are able to cater to all segments or not. So this is again picked from their DRHP of SGS Enterprises. So we have many unlisted players, not so many, but yeah, quite a few. We have unlisted players, and it's just one thing to note here is SGS is the only listed player in the aesthetic industry. And if you would see this table, you would see that it is the only company, SGS Enterprises, which is catering to all the components of the aesthetics. If you would see other companies, they are not able to cater to all the segments except for one, which is doing more than the others, but all the segments are covered by SGS Enterprises. So
yeah, one point I just wanted to mention, which you are telling about the DRHP thing. So reading a DRHP also helps a lot, because I think most of the information, even if you compare with the annual report, so DRHP is a really very good source of information. So generally, when also I follow any chemical or pharma company which recently got listed, I may not be interested into the IPO, because IPO generally generally comes at very elevated valuations. But once we go through the DRHP, we not only understand about that particular business, but we actually understand and learn about the whole sector which they are catering into. So anyone would like to understand more about the pharmaceutical as an industry, I think like you all can follow the DRHP of the AMI Organics. They have given a very good understanding of a pharma sector and like the different segments into that sector, what is the size of the different therapeutic categories and what has been like the historical growth rate. So I think the reading DRHP also really I think helps when you are studying any sector.
Yeah, I would agree with you because when I started studying this company, SJS, so it was my first attempt going through the DRHP of any company. So and what I really understood from the DRHP is what you may not be able to understand from the annual report about what a company does. DRHP would cover a lot of aspects which could help you to understand what they really do, what the industry is doing, they operate in. So yeah, I think that was another helpful thing for me to dive into the DRHP, and yeah, I think I take that learning forward with me.
Right.
So I'll move on to the next slide.
Yeah.
So yeah, now we'll discuss about the breakup of the segments of the company they operate in. So another question that you also asked earlier. So if you would see from their sales breakup, around 58% top line comes from the two-wheelers, and 17% comes from the PVs, and around 25% is coming from the consumer durables. So one thing I want to mention here is, if you would see in the earlier slide, if you would see the pie of the PVs, it's around 37 to 39% out of the whole pie. And if you would see the company's revenue from this PVs is just 16%. So you can understand the opportunity that is lying in PVs ahead of them. So I think that is one of the key things to be noted here about this company. So I'll discuss about the acquisition of theirs that they did. So from their acquisition only, they ventured in a big way into the PVs. So we'll discuss that as well. And since it's an acquisition done last year only, so I think it's a long way to go for them in order to grow that particular acquisition and then grow their pie in the PVs as well going forward.
Right.
Okay,
so just
now
to continue with the last point. So here you all can see that they have bifurcated their business, I think, in like about 4 parts. 3 are major. First one is the two-wheeler, then passenger vehicles, and the consumer application appliance manufacturers. So once you understand like some background about from where their sales and revenues are coming from, and when you have some good understanding, or you can read more about like how the market of the two-wheelers is expanding or growing or probably degrowing, at what scale they are growing, or like if that market has got like certain disruptions due to various reasons, maybe say pandemic or like historically some other events. So we generally get some idea, and then on that we can complete our thesis by understanding a different sector which are catered by this particular company. Same is the breakup which is given at the bottom of the page, which is related to the geographical distribution.
Right,
so most of the revenues are coming from the India, which are about 84%, and rest of the world is about 16%. So this quickly also tells me that they have a lot of opportunity which might be available. If they wanted to focus more on their exports, they can do some probably acquisitions in some other part of world, and from there also they can grow inorganically. So this is just my thinking. I don't know much about this company, but this is the way you can build your whole thesis.
Right. So like Shashank mentioned, the geography breakup is around 84% is coming from India and 16% is coming from exports. But if you would also, I would show you in the coming slides. So this exports contribution, they have increased from earlier 9% to 16% in a few years, and they are targeting to take it up to 25% by FY25. And for this target, they are basically eyeing an acquisition in either in USA or Europe or Southeast Asia. So that is also one development that one needs to keep an eye on, and we'll see more about this in the coming slides.
Just to continue this point, Tushar, so I was just checking the numbers as you are presenting. So while their domestic business has not moved much, so it was about, the numbers are in millions. So if you convert that into crores, so about 213, 214 crores in 2019. So it is about 211 in 2021. While their export business actually doubled from about 23 crores to about 40 crores in 2021. So this also shows us like what can be the opportunity which probably lie ahead in export market, and this also gives us some diversification into a geography. So if there is any particular slowdown which is hitting a particular geography, and the company is concentrated in that geography, then they can get some hit due to that particular phenomena compared to a company which is diversified.
Right. Okay, one thing I would want to mention here also. So if you would see the present market share of this company domestically, presently it's around 15 to 16% of the market share they are garnering, and that will again be bound to grow in future as we go forward. So let's go to the next slide.
Yeah.
So now this table would show you the financials of the other company. For example, what ROCE, ROE, and margins of the companies of their peers are, and where they stand at. So if you would see STS, and if you would also see the growth, the top line growth of this company from 2014 to 2020, they are growing at a CAGR of 15%, and they command the highest EBITDA margin of so that's the 32% from fiscal 2020. So yeah, that is one of the aspect of this company.
Right.
Okay, and one more thing I want to mention. So since while their margins are basically hovering between 28 to 30%, the total utilization of their plant is around 50%. So basically, the capacity that they can cater to is double of what their current output is. So you could imagine the operating leverage playing out in future, because they have a big plant in Bangalore, which is their main manufacturing facility, and as the company grows, they can utilize that plant on higher utilization. They could command operating leverage as well as they have some unused land there, which they can again use to grow their manufacturing facility and grow their business. And yeah, one more thing to add is the plant is completely fungible, so they are able to make whatever segment of the aesthetic that is commanding more demand, and based on that they can produce as much.
So just as Tushar was mentioning about the operating leverage, so operating leverage is nothing but like if you have a plant of say a manufacturing capacity of say 1,000 metric ton, and right now you are only using say 50% of it. So like you have a spare capacity with you for which you are already doing some expenses, right? Like employee expenses, or like the electricity expenses, or some fixed nature of expenses which you are already occurring when you already started that plant, but right now you're not able to utilize it with the full capacity. So as and when in future your capacity utilization will increase, your fixed expenses won't change much. So if your revenues will increase and expenses will remain more or less same, the profitability will actually zoom, and that is what I think operating leverage is. And I mean, this is a very good framework to have, which I also generally follow, where there is a operating leverage where it's going to kick in. Right now, probably the ratios and everything won't look very good, but once the operating leverage actually kicks in, the profitability increases at much higher rate compared to the revenues, and that is then reflected into the re-rating of the valuations and P's and then the market cap as well.
Yeah, and I think one thing I want to add, up until now, what we have discussed about this company, if you would think of this company as a auto ancillary company, then you would see this is, so I'll mention in coming slides as well that this is a completely debt-free company with cash on the books. They hold around 106 crores of cash on their books. So it's an auto ancillary company which is commanding a margin, EBITDA margin of close to 30%. And if you would see their PAT margins, recently they are hovering around 16.2%. So that kind of company we are talking about right now, and then we will also come to the valuations in the coming slides after we understand the complete business of the company. Yeah.
Right. Yeah.
Okay. So now let's talk about the acquisition that I talked about. So up until 2021, beginning of 2021, they were not majorly into the chrome plated segment of the of the aesthetic industry, but or I can say they were not much into the PV section of the aesthetics. But after their acquisition of Exotech in April 2021, they ventured in a big way into the PVs. So what Exotech does is they manufacture the chromium plated parts for the PVs. They also make it for two-wheelers and consumer durables as well as farm equipments, as you can see. And this acquisition has basically given STS access to more customers, where they can also cross-sell their aesthetics from other components of theirs other than the chrome plated. So that is one big opportunity for the STS Enterprises post this acquisition. And if you would see, the EBITDA margins of Exotech are not as high as STS standalone, but then the management is again confident of having these EBITDA margins of 25 to 28% on consolidated levels, which is also evident from their Q3 FY22 earnings. If you would see, they even surpassed this EBITDA margins on a consolidated levels, and they showcased EBITDA margins of close to 29% in the last quarter. So that tells that they are really able to grow their business from Exotech in a big way, and where they are also able to grow their margins on the basis of good top line growth. So that is one thing, main highlight of what they've done with Exotech so far in just 1 year or so. And yeah, if you would also see, it is evident that Exotech, what they did in FY21, the top line, they are able to deliver it in just 9 months of FY22.
Right.
Okay. So now let's discuss more about this company. So we'll discuss about the past of the company, not the very past, but the recent past, as well as the present, and how the future will unfold for this company. So if you would check the auto industry in FY21, also the consumer durable space as well, on a blended basis, both of these sectors degrew by 10 to 12% in FY21. However, SJS grew 16% in the same period. So that tells you how aesthetic industry is able to outperform the auto industry as well as the consumer durables. And then if you would also see their exports, like I mentioned earlier, they were able to grow their exports from close to 10%. It's actually 9 point some percent to 16% in FY21, and they are targeting to take their exports to 25% by FY25. So this is their target, though it is not on the consolidated basis, but on the standalone basis, they are targeting to take it to 25% by FY25. And all these figures are for their standalone company, which is excluding of Exotech. So that's what they are targeting, close to 25%. Now, on the export side, like I also mentioned earlier, they are basically eyeing the opportunity basically in Southeast Asia or North America or Europe. So, and what really they are trying to do here by acquiring the companies in either of these countries is, so basically they would want to acquire the clients from this acquisition of this particular company that they acquire, for example, and then what they intend to do is they basically would produce the goods, the products from their Bangalore facility, and then they would export it to those clients that they acquire by doing the acquisition, because the management is really confident of delivering superior products for which they are able to produce at much lesser cost from their Indian facility. So that is one big point that I really felt good about this company. And also the exports offer higher margins to these companies. So going in future, we will see again margin expanding from this particular area as well, thanks to this particular area of exports. As and when they do any acquisition. Though it's just my view that the current times that we are in, where the auto industry is facing a lot of headwinds. This is also evident from the recent news from a company called Barrick Engineering, where we saw that they sold their global VLS business to a company in France because they were not able to deal with the debt that the company was incurring, and they felt it best to let go of that business and focus on Indian business. So that way I feel that they might come up with any good opportunity in either of these countries they want to acquire in, and they are able to get a good deal out of it, and then they can really grow well from there on the exports point of view. So how do you feel about this particular point, Shashank? This is how I'm feeling right now about what they could do right now about an inorganic opportunity, about the times that we are in.
Right. So before that, just a question, Tushar. Like, do you have the data for how much crores they have acquired the previous company, the Exotech, and like have the management given any guidance on the future, probably the acquisition? Will it be more of a inorganic growth kind of a story, or they will expand, like putting up their own plants in India or in different geographies? What will be the nature of the growth from here on?
Okay, so yeah, so I'll answer first question first. So they basically acquired Exotech. They deployed around 60 crores. Just a round figure. It's not on the back of my head, the exact figure, but yeah, that's how much they deployed to acquire Exotech. And coming to your second question, so like I said, what they intend to do is they want to acquire a company based out of North America or Europe or Southeast Asia, but they do not intend to put a plant in those countries. They want to capitalize their Bangalore facility, and they have a reason for it. They have unused plant up to 50%, like I said. So plus they feel the input cost here is very low compared to if they were to put a plant in those countries, and they are able to offer much superior products. That's what they are confident of. So I think all these things make it a good case for them to just stick with their existing facility without going for a new plant in any other country. And as of now, I think they have enough capacity, plus they have unused land as well, where they could expand further if the need comes as and when. So yeah, that's how I feel about it.
So just one point for the viewers, that like when we study any company, we need to check what is their historical capital allocation. So in this case, they have acquired this the company which is like Exotech, So we need to see like how much they are spending on that company. Are they trying to buy it at a fair valuations or like very high valuations? What is the thinking of the promoter behind the organic or inorganic growth, so that like we try to understand more and more about the business, and we get some clarity what probably can happen in future.
Yeah. So now, so as of now, if you talk about Exotech, they have completely domestic presence, but the company is planning to export the main product of Exotech, which is the chromium-plated parts, to other countries as well. So we could see that panning out as well in the near future or medium future. So we'll see how that goes.
Another question, Tushar. So, do you know what is the reason why they have acquired the Exotech? They didn't had any capabilities which they got from the Exotech before the acquisition, or Exotech is like manufacturing probably the similar products which SJS was already into.
No. So basically, they wanted to expand the segments of aesthetics that they wanted to operate in. So like I said earlier, they were not into chromium-plated parts, but by this acquisition, they entered into chromium-plated parts as well. So now their kitty is full. So now they are basically covering all the aesthetic components that are there, and it is the only company which is catering to all the aesthetic components as of now.
So while studying acquisition, we also should study like what kind of acquisitions they are trying to get into and what is the reason for that. For particularly like company try to acquire some companies for some backward integration or some forward integration, or to diversify their product portfolio, to diversify their geographical presence. So these are the different things which generally the companies do when they try to like grow inorganically.
Yeah. So another thing I want to mention about this company, which is coming from the management of the company, is that so like it is the only company, or I could say that there is no other peer of the company which could provide all the variety of aesthetics, and it's not just that domestically but also across the globe. So there is no other company that could provide all the variety of products as well as the complexities this company can handle. So I think that is one highlight of the company, as Steph
That
Enterprises.
is what we call generally as what are the entry barriers into a segment. So probably this can be the one where the number of like different parts or accessories which company is manufacturing is too huge, and probably all the companies cannot manufacture like many accessories, and that can act as a entry barrier.
Yeah, and another thing which is good about this company is so like I said, they are basically involved with every OEM from the design stage, and also there was one thing that was highlighted by the management in the last earnings call, that they are working on some futuristic technology, which management as of now did not really mention in detail, but that aspect of the company really tells about how the company is way ahead of the curve, and how they are really thinking about the future as well as the present at hand.
Right, right.
Okay. So this point I also mentioned earlier, that they have the price competitiveness against their global peers because of the low input cost that they have from their Bangalore facility. At the same time, they are able to maintain superior quality of products, and the company has been strengthening its sales team for the export side, and also to acquire more business overseas. So we would see that how really that pans out in the future of this company. Now coming to the favorite part of everyone, how, like, what is the EV aspect of this company? So they have also acquired business from the EV players, be it the big names like Ola, Revolt, but they are also in discussion with other EV startup players as well. So that is one good development for them. However, I would I would feel personally that the sector they operate in is completely sector agnostic, because when it comes to most of the aesthetics, it does not depend if a vehicle is ICE or EV. But yeah, but there could be some products of EVs which could distinguish from ICE. So, but they are completely ahead of the curve, and they are into it in a big way as well. So yeah. So if we talk about more about the guidance of the company that they have given, they are basically aiming to double their sales in 3 years, and they by doing this they completely are able to outperform the aesthetic industry, which is anyway growing, will grow up to 20% CAGR for next 4 to 5 years.
Right. So Tushar, like if I'll ask you like 2 or 3 points which you probably can tell me, what are the different entry barriers which you feel into this particular sector, which is the aesthetic sector, and like what is the some differentiation this company is trying to create, which is the SJS.
Okay, so what I feel from my limited knowledge is that, so since it's the only company which is catering to all the segments of the aesthetic components, and there is no other company even in India or globally. So that tells you about the moat that this company has. Though I wouldn't be very sure of what really is the thing that they are able to do which others cannot. But yeah, that is how it is as of now. And another thing that I really feel good about this company and I'm confident of is the management of the company. So I would like to touch upon the management of the company. Not the though K. Joseph is the man behind the company who started this company, but I'm majorly focused on the CEO of the company, who's Mr. Sanjay Thapar. So if you would follow more closely this company, so when Evergraph acquired this company back in 2015, they appointed Mr. Sanjay Thapar as the CEO of the company. And if you would see the history of Sanjay Thapar, he was the man who was very instrumental in the growth of the Minda Group. From the initial days, he was with them. So and that is one of the reason that gives me a lot of confidence about what Mr. Sanjay Thapar can do with this company by staying ahead of the curve, and for a company, for an industry which is anyway going to do well for the next 4 to 5 years at least.
Right. So a lot of time I also get this question from like discussing with various investors or internally also when we do some analysis of a generally micro cap or a small cap where the information is very limited. So even if you will check, same is the case I think for the SJS, it is a recently listed company. The IPO probably a DRHP is available, and I think only one con call is available. So I also gone through the con call. So question is like after doing some research, we get a break. Like we don't know where to look ahead and what kind of things we can like do so to proceed the research. I think the scuttlebutt also helps during these situations. Like what is the ground reality which we can dig with our circle, and like if we can get any information on that side. Apart from that, I think the capital allocation also helps, right? Like what is the historical things the management has done, and then how they have behaved and allocated the capital during different cycles. So I think that is also one of the key like the reason or the factor which I look when I try to understand the smaller companies where the information is not much available.
Yeah. I'm glad you asked about the scuttlebutt as well, though. No, I just came across some information about the recent plant visit that happened at their Bangalore facility. So that was there was an announcement on BSE for the same as well, and I got some information about this visit of the plant. Is that so this was the feedback that I received, was that this the person who visited the plant, according to him, this was the best facility that they had seen for an auto van company. So that was the feedback, which also gave good confidence about the pedigree of the company and the quality that they maintain in their day-to-day work. So yeah, that is one aspect of it.
Right. Tushar, any framework on a valuation side, how you decide like what is probably a good valuation and when you try to enter into any business, not respect to only edges, but just trying to understand your overall valuation framework. Like what is your generally how you look different companies and when you plan to enter into them?
Yeah, so valuation front. So if I just talk about STS first, so if you would see the current valuation of the company is currently trading at a forward multiple of close to 15. If I just talk about STS in particular, and if I see how the company is going to do in coming years, or also how the company has historically done in past 6 years, they have grown at 15% CAGR. They are having a EBITDA margin of close to 30%. They are a debt-free company with cash on books, around 10% of the market cap, and they are having a cash off. So if you could also subtract that to come to the again a P, that would again reduce further. So for a such company working in such industry which is slated to grow 20%, one thing I didn't mention maybe. So while the industry will grow 15 to 20%, they are confident of growing 20 to 25% in coming years. Though I'm not really saying, or I'm not really feeling that will happen based on the macros or situation or the headwinds that we are facing on the auto side. But what I really feel is if this such kind of company, a debt-free company with such margins, such growth trajectory, and just catering to all the aspects of the aesthetics which no other company is doing, is trading at a forward PE of 15, then I'm not really I'm really comfortable holding such company, even if the company or the industry they operate in is not gonna do anything for next few months, quarters or whatever, because I'm seeing it as more of a structural story that's gonna play out. It's just my personal opinion that auto industry has bottomed out. And if you would see the reasons behind it, we had semiconductor shortages, we had rural demand impacted because of the COVID in FY22 in a big way, and then we had costs going up for these vehicles, which all impacted the sales of the auto sector. But if you see the near future, for example, if you see the Q1, there are a certain tailwinds for this industry because of the wedding season that is there in a big way from April to June. We have around 4 million weddings. And then if you would also see the kind of agri exports that we are doing, that is in a big way will be helping our rural India. So I think from there the demand will pick up in a big way. So, but that again would be just for a near term. So it's just my opinion that Q1 FY23 will be really good for the auto industry. However, again, like I said, it's just a shorter term thing. What will happen in coming months or quarters? What I really see is that the valuations of this company are very low, and even if next one year or so will not be so good for the auto industry, that the company will again outperform that as well as when the industry finally stands up on its feet, then you would see it growing in a big way. Also, we would like to see how their exports shape out and how they are able to do acquisition as and when they do it. So that is about the STS. And coming to your next question, how I normally assess other companies' valuations. So basically, I would check. So basically, that comes down to some of the special scenarios. For example, if I could take some examples here, So for example, if a company is facing a very temporary headwind, for example, Google Das Exports was one company which I studied, and I came across that company after the Q1 earnings of FY 2022. So that was the June earnings call that I went through, and I think I was lucky enough to come across that call at the right time, because during that quarter the company was the factory was shut down for the company for quite many days due to the lockdown, and they posted loss during that quarter. But then during the earnings call, they mentioned that their order book is so strong that they added more people, more workers at their factory, and they were extended their working hours to fulfill that order book. And we all know about the textile industry, how they have got the tailwinds during the past 2 years. And if you see from those days of Google Das Exports to today, it has come a long way, both in terms of the stock price as well as the earnings that they have posted. And one more thing that has done really well for them is the pricing power of that company, because during the inflationary time as well, they are able to maintain their margins, because they were able to push the prices to the end consumer, while they had fixed contracts with their suppliers of cotton mainly. So, and that the company has got re-rated in a big way. So that was one of the trigger for me, that a company is facing temporary headwind, but anyway bound to do really well. You just gotta catch that company at the right time. So maybe the luck also plays a good role in that factor, because you are able to come across such update highlights at the right time when the street is not really checking it out. But once a company is checked out by street, everyone, then it's anyway bound to get re-rated, which has happened with Google Das. So other than that, I give a lot of focus to the margin of safety. For example, if I'm seeing a company which is going to do well in coming years, the market size of the industry they operate in is big, and they have peers who are listing in higher P's. It's a completely unknown company. Then I would go with that company as well, because I see a good margin of safety. Though yeah, we need to also be mindful of all the things which could be responsible for a lower PE of that company, but that could also be possible due to any like capital allocation that they did some capex which took some time to really convert into numbers. So yeah, you need to be mindful of all those things. So that's how my investing philosophy is like.
Right. So like I will just add what is my understanding on a valuation side. So generally what happens is like the good business and the good price generally don't come together. When the business is good, generally market gives it the good re-rating and the good valuations. But generally one should like try to buy and allocate a capital when there is a temporary hiccup, or there is some earning miss or something, or probably what is happening right now is the interest rate. Yesterday there was a hike of about 40 basis points, and then like there are the fears about the inflation, and then there has been some correction going on in the market. So during this time, if we think any business can do really well in a long term, probably may not do very well for next 1 or 2 quarters, and that's why the market is like giving us the opportunity, and the valuations are probably looking good. I think it's a good time and good opportunity to allocate some capital, and then we can build a position as we see the improvement and in their financials. So I think this is one of the way by which we can think about allocating a capital. And another point which I would like to discuss is about like the P ratio, or the optical what we can have. We generally can value any company just by checking a P ratio. So sometimes like the statistical P ratio, if it is low, generally we feel the company is undervalued. But there can be some different reasons which market generally knows, but the individual investor as we probably don't know about it, and that's why that low P generally can remain low. So we need to differentiate between is this company really undervalued, and just because market is not tracking and not interested right now, and if it is an opportunity for us, or is it a really value trap? Because I have seen many companies which probably traded like at a single digit P and remained there till now, and never they didn't got like the re-rating. So we have to differentiate between the value trap and actual the candidate which is available for a value investor.
Right, right. And I think earnings call makes a lot of difference for an investor who's investing on his own. So I think that was one area that helped me a lot during past 2 years. I was able to find some of the companies which really did well for me just on the basis of one earning call that really changed the course of the company. So you just need to catch those companies at the right time. So I think it's important you go through the earnings call, but then also luck would come in when you are able to find a company at the right time, facing temporary headwinds. Yeah.
Yeah, so I completely agree with the earning con call point. So we here at a Value Educator are also tracking the various companies and tracking the earnings call. Last quarter we have done about 80-90 earning call attended and like compiled the notes, and it is available on our website. So that probably may not help us immediately today because valuations probably are not good, or business is not very good, but that gives us a very good collective understanding about that particular sector, and probably our future capital allocation mistakes may reduce. So I think, Tushar, it was a very good session. If you wanted to add anything as a closing,
Yes. So one thing I would want to add here is, so once you invest in a company and you are you've fully studied the company and you have full conviction on the company, you stay onto it. You held on to it because your thesis may not pan out in days or weeks. It could take months, but when it pans out, it gives you big alpha. So that has happened with me, because when I invested in some of the companies, they didn't do anything for next few months, but when they did, they really did it in a big way. So many of my Twitter followers, they know when I started writing about Gokuldas. So when I first invested in the company, it didn't do anything for first 3-4 months until the next quarter earnings came out, and even after that it took some time to really go up, and now it's almost up 150% for me, and I think the stock has got re-rated and will continue to re-rate the kind of tailwinds the company is enjoying and the sector is enjoying, based on the FTAs and everything. So yeah, just stay put to your thesis. And one thing more, so if you invest, you should be fully aware of the macros. That is just one suggestion of mine, that you should always read a newspaper every day, a business newspaper. You would understand many aspects of the economics, because the company you are invested in, there are a lot of factors that impact the company. So if you read a newspaper, you would understand macros very well, how these things impact you as an investor.
Right. So Tushar, fantastic session. Thank you for it. So just to put one last point, so when you are telling about the to stay put, so there is a quote which I also like. Is there in my office, so that is by the I think Thomas Phelps. So he says, to make money in market, one should have the vision to see, courage to buy, and the patience to hold. And the patience is the rarest of the three, right? So it's not like investing is not the game about like how much IQ I think you have. It's more about how much stomach you have to hold on when the stock price falls or it doesn't move.
Right.
So guys, one more update. So I will be starting these sessions of like I'll be inviting the different guys who are studying about the different companies, more from a macro caps and small cap, which are lesser known companies and like lesser discussed. We are not anyways interested into the Nifty 50 and the top 100 companies, because everyone knows that Asian Paints is a good company and HDFC Bank is a good company, but it is about the history. We need to look ahead and we need to see like where we can create a good amount of wealth, and it is only possible by investing into small caps, where we can get like multiple advantages of like a PED rating as well as the superb earning growth if our thesis actually plays out. So if you are also interested into coming to the Value Educator platform, then please let me know. You can check my email and you can send me your PPTs and presentation. We can have a discussion, and then you are welcome to present your thesis on any particular company which you are tracking, and so we all can also learn along with you, just like we did today with the Tushar. So Tushar, thank you for your time, and we'll look ahead for the another session for any smaller companies in future as well. Thank you for your time.
Thank you so much, Shashank. It was an honor doing this with you.